Great to be back, and what a down day in gold. And I want to just caveat this and say, gold I still think is going much, much, much higher, but we just as investors can't expect it to just only go up. Healthy corrections are important. It builds a baseline, and then we can go on to the next marathon run to the upside. So yeah, it's been quite the ride here.
Amen. Amen to that. But I did want to give kudos to you because as we were on that 9 consecutive run, you really were like, guys, hold on. Don't get too excited. I don't know what you see in the charts, but you saw something brewing.
Yeah,
you saw something brewing.
and let's just go over that for those of you that are tuning in new, right? Let's look at this chart because it's fascinating when you look at 1979 and mirror that with 2025. And just to take a look at this, we had the same run up early here in 1979. We had the same run up here in 2025. Then we went into this base of consolidation, and then literally 9 straight up weeks in a row in 1979 led to this big correction. And sure enough, 9 straight up weeks, and we're correcting as well. And a lot of people say to me, and this is a valid point, is that, this isn't the same, right? We have a very different scenario. It's true, and we're going to go over that in a second, but I think it's important to recognize that fear and greed are the same, right? And so while in 1970, Volcker was raising interest rates in the 80s, right? He raised it 15, 16, 17, 18%. Here we have the Fed lowering rates. We also had only 32% debt to GDP in 1979, 1980. We have 130% now. And so things are very different, but human psychology doesn't change. Now, how does the difference play out? The difference maker is in 1979, when we topped out, it literally took almost 30 years for gold to make a new all-time high. I think we make a new all-time high within 6 to 12 months, but the correction still needs to happen.
You see more downside pressure here.
I do. And if we go to this other chart on gold, I've laid out my levels already. We're already kissing the first level here at around 39.48. We got as low today as 39.71. That's going to be a first level of support. Second support and third support follows. And for me, listen, these are tradable levels, these first two. Once we get down to the third support and my max drawdown level, that's really where I start buying for the longer term again. And listen, I still have my long-term gold holdings. I want to be clear on that. But for me, I can't pay up here when I see past corrections. One thing I want to show you guys, and this is super cool. So let's go back to the 1979s. Where did gold pull back to when it had its first major bounce, right? And the answer is, if we look at this, look at the high of that push up where we consolidated. And if we draw a trend line there, that's virtually where we pulled back to before we actually got our first major bounce in gold. Well, what does that mean? Well, if we pull back in that same manner in 2025, that would bring us down to about that 3,500 level, which if we flip to this other chart, that's my max drawdown level. And so ultimately, while the correction is likely going to be a little bit painful for people that bought at 4,000 or above, I think, again, if you're someone with a longer term view, the differences in the government spending, the debt the U.S. has, debt to GDP, and interest rates, that tells you buy like crazy when it gets down to these levels.
Wait, you just made me think of something. I watched an interview with Luke Groman, and he said, when it comes down to gold and whether you're questioning whether that bull run was over, it comes down to 2 questions. Just to your point, Gareth. He said, you just have to ask yourself, is the U.S. willing for China to make more and more of its weapons? And 2, will China and Russia institute puppet leaders like Yeltsin, he named, who are willing to become U.S. economic vassals, willing to buy infinite amounts of U.S. treasuries and fund U.S. deficits forever? He said, if the answer is no to either question, then that gold bull run is far from being over.
You're right.
And
I
think that he's right. Yeah, he made a very, very, very valid point.
And I think again, you just have to look at it and say, is there any will of the U.S. government to stop their incredible spending spree? I mean, at the beginning of this year, we all were so optimistic that reckless spending would get under control. We had the Doge situation with Elon Musk. And that is so ancient history at that point. And that just reinforces the fact that, you just have global central banks buying gold. We have governments that are just taking on more and more debt. And it just leads you in one direction, which is precious metals or potentially Bitcoin longer term.
And we're going to get to Bitcoin, but look, we're speaking in a very important news week. We're speaking ahead of the Fed Wednesday, Gareth, and this U.S.-China trade deal. The U.S. says we're closed. China says not really. We don't know. Who do you believe here? Any surprises from either of these two major events?
Not really, right? So the Fed, number one, they're going to cut 25 basis points. I think for the most part, they're going to stay somewhat on the more hawkish side, meaning that I still think we're going to get a rate cut in December, potentially January, but we're not going to get that 50 basis point at any of these meetings. The main culprit here is that inflation, to me, is still a little on the higher side. And the question, too, we have to ask ourselves is the CPI data that we just got last week. Number one, it was the only economic data that was reported by the government while it shut down. And number two, do we actually trust that data? Because again, I liken back to the previous, and this is so interesting. If you go back to the last Fed decision when we had them cut that 25 basis points I think it was in September, it was 6 days before that announcement, we shockingly got this really bad jobless claims number, people filing for unemployment. It shot up from 220,000 to 263,000. And everyone in the media was like, oh my goodness, maybe the Fed needs to cut 50 basis points instead of 25. Lo and behold, they cut 25 and they kept on their path. But then miraculously, 5 days before this economic event of the Fed rate cut, now all of a sudden we get CPI showing much better than expected inflation, 1/10 better across the board on core and regular CPI, also pushing the Fed to do more, to be more dovish. And I would just call a question mark in on this, that it seems very suspect that just before these Fed decisions, the data all of a sudden looks very, very good for rate cuts.
Just before we move on for gold, getting back to your point about how you feel gold will make a new all-time high within 6 months to a year after this shakeout, any direction or levels as to what that all-time high? What all-time high are we talking about, Gareth?
Yeah, I mean, I think overall you have to be thinking 5K is the next big threshold, right? Human nature, psychology, which is a big part of investing and trading, it's always attracted to these bigger numbers. And obviously we got up to about 4,400 or so. Now we're correcting. I think the next push takes out those all-time highs, tags 5,000. I don't even think that's the end of the bull run. I think this could be a multi-year move, but that would be where I would say, okay, once we achieve that, let me just again take a pause. Let me analyze the charts. Do we see a pullback at that point before we continue much, much higher? But I think like 8 to 10K is very reasonable in the next 3 to 5 years on gold.
Okay.
Again, I'm not looking at, thousands of percentage gains. I think you have to be realistic in that sense, but where else are we turning? Especially with risk assets. And I think this is so crazy, right? Is that gold has been going to new all-time highs until this latest correction, while the stock market's been going to new all-time highs for months and months and months. Historically, that does not last. And I do worry that if the stock market corrects significantly, which I do think is on the horizon,
yes,
more money eventually finds its way into gold.
And we're going to get to that in a second. Let me just, while we're on the topic of precious metals, just a few words on silver. Obviously also getting a beat down here today. Is it just tracking gold?
Yeah, so silver is one of the most remarkable, and this led me to make this call on silver topping out as well, is that it's the beauty of charts again. And I know it almost seems too simple to work, but it does, is that if you take a parallel channel and you just connect it to the low here in 08, so the financial crisis low, and connect it to the low of COVID, and you stretch that parallel up. And so let's just go back to this. So basically all I did was I connected those two lows. You stretch that parallel up to the 2011 high and look at what it gave us. It literally gave us the top. And this is just the power of charts. And remember, charts are replications of human psychology. And so what it's telling us is that you're likely or probability-wise going to get a pullback. And that's exactly what silver has done. Now, the bigger question is, how low does it go? Like, where am I as an investor starting to accumulate? All I'm doing here is basically drawing a trend line through these recent levels. And essentially, I'm looking for a move back to about $40 or so. We get back to $40, which, by the way, a week or two ago was like, that's so far away. And then here we are from 54 back to 46 in just a matter of a week or two. So don't be surprised if we get back down to $40 and you could accumulate all you want there.
Because you see silver going to?
I still think silver's going to 60 to 62, probably early next year.
Okay.
And then beyond that, the sky's the limit. The only trigger here, and this is the only thing that people have to remember about silver, is that it is partially an industrial metal now, more and more, in fact. And so if the economy really here in the US starts to struggle, there will be some downward pressure that the precious metal side of investing in it will have an impact on. And that's the only thing, versus gold is just purely a pure play on the fiat currency issue.
I always bring you back for the Outlook, our Outlook, coveted Outlook series. But do you already have your best performing asset of 2026 picked out?
I don't yet. But I'm on notice now from you that I better get my butt in gear.
All right, let's look at the S&P, the beast that keeps on giving. What do you see in the cards for equities here?
All right, so S&P new all-time highs. I think it's so emblematic of this irrational exuberance, and I use that term on purpose. Greenspan used it, I think, in 1996.
Yes,
and I think what we have to note is that irrational exuberance like that, it lasted for another 3 to 4 years before the market topped out. But I do want to show you guys something that I'm paying attention to here. We're going to use our trusty parallel channel, and we're going to zoom out to the COVID lows again. So we're taking, anytime you draw a trend line, it's important that you're not just picking arbitrary highs and lows. You want to pick significant market highs and lows. And so what we're going to do is we're going to take this trend line from the COVID low and we're going to stretch it through all of these lows. Now, what's remarkable about this is that we can see this trend line, every pullback in the market. So the COVID low to the 2022 bear market low, to this correction that we saw in July 2023 into October of 2023, and then the liberation sell-off low, it's all in a perfect trend line. Like, holy cow. We think the markets are like panic selling and that there's no order in this chaotic world we live in. And then you see something like this, and at least for me, I'm like, whoa, this is kind of crazy. So let's take that. Let's stretch up a parallel to the bulls market high from 2021 right here. And let's look at where we are. We're just peaking above this, all right? So we are just above this level right now on today's market. Now, the reason why this is important is we're above it. Can we hold above it? And
right.
What I'm looking at, I'm on a daily chart. If we flip over to the weekly, you can see on the weekly, I'm looking to see if we get a weekly close above this, or is it a bull trap? And the reason why I would wonder if it's a bull trap is that we're rallying on news here that there's supposedly a framework of a deal with China. We've heard that so many times with China and nothing's ever come from it. So I'm very curious if when we see President Trump meet President Xi later this week, is there actually a deal or not? And I think that's going to be the determining factor here. I will again say that irrational exuberance can last for long periods of time. So just be prepared.
So that Thursday is going to be extremely important for you to determine the next direction for the S&P here, Gareth.
I think so. I think if you get an official deal and it actually goes through, then the markets continue possibly to float up into year end, maybe as they call it, melting up into year end. Remember, once we get to December, the hedge fund managers are going to have to chase this market. And so I think if you're going to get a correction, you basically have a month, maybe a month, 5 weeks or so, to get a correction in this market before end of year starts to take over for that melt up.